So today I have something very special for you. Simon Dixon, the CEO of Bank to the Future, who you've probably seen from his numerous TV appearances, is joining us to discuss key topics, such as what will happen to the US dollar with all of this money printing going on. How do we, as investors, protect ourselves? And what's going to happen to the stock market and Bitcoin? As always, let's get straight into it. Okay, so we have Simon on the line. And the first question I want to ask you relates to money printing and quantitative easing. So while quantitative easing, or money printing, has been used in economics over history on numerous occasions, it's 2008 which really comes to mind for most people, as central banks printed vast quantities of money. During that time, printing such large amounts of money was considered a one-off, perhaps a once-in-a-lifetime event. Yet it's just 12 years later, and we're witnessing more money printing than ever. What do you think are the long-term consequences of this for currencies like the US dollar and the Great British Pound?
So quantitative easing is a very complicated way of helping people understand the realities of money. I created a video called The Six Forms of Money, and the reason I created that is because most people think quantitative easing is printing money, but it's not actually printing money. It's a bit misleading. The money that actually gets printed is done by the government when they issue notes and coins, and they actually earn money from that. They sell notes and coins to a bank, and it reduces the amount of tax that we need to pay. It's called seigniorage income. Whereas quantitative easing is the process of a central bank creating new digits in a computer and then using those digits to actually purchase debt or loans from the government. And so what is happening here is the government is borrowing money from the central bank, and the central bank is creating that money. It also uses that money to purchase products from companies, and then companies use that in order to buy back their stocks. And so really this is just all financial engineering, which is bringing lots and lots of inefficiency and malinvestment into the economy, whereby money is moving in the direction that central banks are trying to direct that flow. And so what you end up with is a scenario where because we now live in a world where the only model, the only driver, the main driver of economic growth is how much individuals are willing to borrow, how much companies are willing to borrow, and how much governments are willing to borrow, you end up with a deeper and deeper and deeper levels of indebtedness for both individuals, companies, and governments. And therefore, you have these crazy policies designed at getting people deeper into debt, like we're seeing right now, interest rates going down to zero. That means that those most connected with the central bank can borrow money at virtually nothing and use it to purchase assets. And we end up in a world where we are right now, where essentially the market doesn't really exist. We don't have a stock market. We have a market whereby the central banks are injecting money and trying to dictate and protect the markets, which is a quasi, free market versus socialist communist type thing. There's not even a word for the market right now. But in a nutshell, it reallocates investments in the wrong place. It hurts savers, and it encourages people to take on more and more debt in order to drive economic growth.
Yeah, I've been shocked by everything I've been... Actually, I say I'm shocked. I'm not actually sure I'm that shocked, which is maybe part of the problem. And there's lots of kind of consequences you can see this playing out. So for the stock market, for things like gold, for example, or Bitcoin, I want to touch on those. But let's first talk about the currency element. So for the US dollar and the Great British Pound, how do you see this all playing out for them?
So the pound is a bit of an anomaly as the previous superpower currency in the world. It was the longest standing super currency power in the world. And it was after the World War was renegotiated, whereby we would enter into a dollar denominated world. Now, the regulator of that dollar was gold. So we'll touch upon gold later. But essentially in 1971, we entered into a world where currencies were just freely traded against each other. And then currencies were used as political tools to engage in currency wars, which is what we saw before this health crisis. We had a trade war between China and America. And this is all because of currency wars. Essentially, you have three significant currencies in the world. You have the Chinese yuan, you have the dollar, and you have the euro. The interesting thing about the pound is that the reason why Brexit was such a strange concept, because the UK was actually in Europe, but actually maintained control over its own currency. So UK, out of all the countries, had the best of both worlds. It had the free trade of Europe, but it maintained control over its own currency. And it's ironic that the UK was the one that negotiated itself out of having the best of both worlds, when everyone else is stuck with the euro right now. But you end up with these strange scenarios. So, example, right now you have the dollar, which is the largest consumer in the world. Quantitative easing means that consumers are taking on record levels of debt, corporations record levels of debt, governments record levels of debt. All of that debt is being used to consume goods. Now, what those goods tend to be, we've entered into a world where China essentially is supplying the vast majority of those goods. So with China, they have a slightly different system. Because they have controls the number of dollars that companies, individuals can have. All of those dollars enter into the Chinese central bank, the People's Bank of China. And so when US is printing lots and lots of new dollars or creating new dollars through quantitative easing, those goods are being used to purchase goods in China. Those dollars end up in the central bank in China. It's called the People's Bank of China. And China then has to swap those dollars for Chinese yuan because they control it. And therefore, it exports inflation from America to China. And so you end up with printing lots of Chinese yuan. And then what does the China do with those dollars? Well, it purchases the debt that America's borrowing. So China's lending all this money to America through the bond markets. So therefore, China has vast reserves in dollars. America's printing all this money, exporting it to China. And China has to diversify. So it diversifies by buying European debt and exporting goods to Europe. And you end up with this one currency where these three economies are deeply intertwined and dependent upon each other. And you have these wars, and essentially where China tries to devalue its currency in order to make its exports cheaper so that it can end up with more employment, more jobs, more factories, exporting more goods. And these currency wars, because money is being created as debt in one country, the currency is making its way to another country, and then they're using that currency in order to lend it to that same country. So you end up in this crazy environment. And really the pound has become insignificant in that. It's only got its strength because it was the last superpower economy. But it's driving, it's got no significance in terms of foreign central banks don't hold pounds. It's all about the dollar, and it's all about tools that you use in these currency wars in order to drive more employment and more power to your country.
That's fascinating. You touched on the central bank of China and the US dollar. There's a lot to unpick there, but I kind of want to focus on gold, really, because we've seen in 2019 especially, a lot of central banks have been buying gold. Partly you could argue because the dollar is the reserve currency of the world, and with so much money printing or adding zeros to a screen, so we have so many more dollars in the market, there could be inflation coming up. So central banks worldwide would obviously be concerned if the currency that they're holding could be highly inflated, and they need to hedge their bets. And this is when things like gold and potentially Bitcoin is entering the conversation. They potentially come into it. What's your take on hedging your bets with these types of investments? And would you like to touch on it from the perspective of central banks as well?
Sure. So I talked about that relationship between America and China. America's quantitative easing flooding the world with dollars. We now have about 70% of all currency as dollars, 50% of all transactions are in US dollars globally. A massive chunk of those dollars are making their way into China because they're purchasing cheap goods. They end up at the People's Bank of China because they have currency controls and they have to print Chinese yuan in order to suck up all those dollars and give their factories and everything Chinese yuan. So this exports inflation to China. And then therefore they look to devalue their currency so that their goods are cheaper for people purchasing from America. But what else do they need to do? They're ending up with all these dollars at their central bank. They're overexposed to the US economy. So if the US economy, goes through trouble with their currency, which due to their policies is something that could happen, then China has too much exposure to the dollar. And what they tend to do is they buy treasuries so that they can receive returns. And so therefore, the relationship between China and America. But what else would they do that? In order to reduce some of their exposure, I talked about how they buy European debt, and they have a relationship with Europe. But the other thing that they can do is they can just simply buy gold. So China went through a policy of sucking up as much gold as it possibly could with these dollars, and then later announcing that. And this is, so China has accumulated vast sums of gold as a hedge against exposure to what could happen to the dollar and what could happen in terms of accumulating more power in the upcoming monetary renegotiations and currency wars that come as an inevitable consequence to financial systems being destroyed through exactly the types of scenarios that we're in today.
And what do you think about Bitcoin? Do you think the Bitcoin, because the core concept of Bitcoin is in a way to be similar to gold. It's to be a currency which can't be affected by governments. Do you think this comes into the conversation as well?
Yeah, so Bitcoin has three unique properties, and I got involved. I spoke at the very first Bitcoin conference in the world and wrote the book, the very first published book, Bank to the Future, Protect Your Future Before Governments Go Bust, which was the first published book to include Bitcoin. The reason I did that is I pointed out three troubling properties with fiat currencies and banks. When you deposit your money at a bank, the bank becomes the legal owner. When they become the legal owner, they spend that money as they choose. And through the central banking system and through tools like quantitative easing and various other things, the supply of those currencies always gets devalued over time. And so you can buy less goods in the future with those currencies because the supply is always going up. Bitcoin's the exact opposite. So Bitcoin gives you the ability to own your own money. I don't want to get into the technicals of it, but I'm sure most in the community are familiar and you can dig deeper. But it also, when you own your own money, you can spend it as you choose because you can send it digitally and globally. But also the supply is fixed, whereby it cannot be, to the whim of political agendas, it cannot be increased. So it's kind of like a quantitative tightening when traditional money is quantitative easing. And so Bitcoin is what I call a speculative store of value. Gold has 5,000 years of history and it's a store of value. It doesn't make you much money owning gold traditionally. It preserves your wealth. So if you've already made a lot of money, then people tend to put that money into gold as a way of preserving their wealth, the definition of a store of value. The reason for that is because of the similar properties. You can own that gold. You can transport that gold without a banking system, and its supply is fairly fixed. Bitcoin does all of those better. It's easier to own, it's easier to spend, and its supply is tighter than gold. The problem is it's only got 10 years of history, and because of that, the majority of the world still think that Bitcoin is a Ponzi scheme, a scam, a currency just for drug dealers, or a get-rich-quick scheme. But what I've seen over the last 10 years is that each year, more and more people realize that it's not. And as more and more people realize that it's not, because the supply is fixed, each year that they still think those things, the next year they have to pay a higher price. So it's been the highest performing asset for 10 of the last 12 years. And that's because every year, more and more people realize that it's not a Ponzi scheme, it's not a currency just for drug dealers, it's not a scam, and it's not just a get-rich-quick scheme. And so this is the interesting part about Bitcoin. Now, where this goes next is I do believe in the currency wars, just like China is accumulating gold in order to position itself for the next monetary renegotiation. I think very small central banks and countries like we saw in Bulgaria, for example, the Bulgarian government confiscated 200,000 Bitcoin from a criminal organization. Those Bitcoins just disappeared through corrupt governments. But the interesting thing is those 200,000 Bitcoins are now worth more than Bulgaria's entire national debt. I think a lot of countries that are victims of dollar-denominated debt at the moment will see Bitcoin as a speculative play in order to try and pay down some of those debts in the upcoming monetary renegotiations.
There's such good points. I've actually made a video recently talking about Paul Tudor Jones investing 1 to 2% of his wealth into it. And it's really putting forward the argument that it is an asset which has performed incredibly well, better than just about any other investment. And it's positive, I believe, if you invested 96% of the days of its existence. The only problem is most people heard about it in the 4% when it wasn't profitable. So he understands the concept that investing 1 to 2% is not the same as going all in. So he's sort of taken away, in a way, he's sort of taken away the intelligent argument of it. He's looked at it from a what is it worth, and he's ranked it in 4 perspectives, which I cover in that video, and concluded that it's very risky. As you say, it's only had 10 years, 12 years of existence versus gold's 5,000 years. But again, going all in is not the same as investing 1 to 2%. So I still want to push you on what you think of the US dollar, though. I want to understand, what's your end game? Where do you think this is going? What do you think is going to be the situation with the US dollar in 5 to 10 years from now?
So, okay, answering the question on the end game. The end game for me is to, when people they ask me, when are you going to exit your Bitcoin? And they're thinking about it very differently to how I think about it. When people ask me, when are you going to exit your Bitcoin? What I hear in my brain is, are you going to buy dollars? Are you willing to buy dollars? So exiting Bitcoin for me is, well, if I'm exiting Bitcoin, then I've got to buy something else. So it's, I appreciate that at different stages of life. I turned 40 this year, and I'm more risk adverse than I was when I first got into Bitcoin 10 years ago. And as I approach retirement age, you start to try and find more and more stability in your life. So when people ask me, what is the end game? Well, if you're asking me to sell my Bitcoin, what am I going to buy? Well, one of the things I could buy is dollars. And because I know that the long-term value of dollars is only going to go down and down and down, because 95% of its value long-term has, then I'm only going to buy as much dollars as I need to spend, or I need stability in my life. The rest of it, I'm going to hold in things that I think will outperform those dollars. And so we're driven into speculative economies. Now, I do personally believe that holding dollars, again, this is time horizons. Time horizons are very important here. If you have a mortgage or a rent in pounds, then you probably don't want to hold dollars, because the volatility between the pound and dollar, or the pound and gold, or the pound and Bitcoin means that you might not be able to cover your rent if you're living month to month. So you've got to be very careful separating money that you spend from your investment. And that's a really important thing. And that gets more confusing with Bitcoin, because Bitcoin is both money and an investment and all these different things. So people get very confused. Part of my job is to try and help people understand the difference between these different buckets, so that you can start to plan those things. But from my perspective, dollar is completely entrenched in everything. And so therefore, short term, I believe the dollar is the place to be with currency that you need to save. But then I need to, preference that with, again, different things. So if you're in the pound and you pay your rent in pound, you pay your mortgage in pound, you need to buy your food in pound, then you're going to need like 7 months or a year's, or even 7 years worth of pounds to feel secure in your life. But the challenge with that is that some people live in countries where their currencies are being destroyed. So it's different advice for different people. But then in terms of the actual dollar, I still believe that we're going to see a strengthening of the dollar simply because of these interrelationships that central banks have used gold, treasuries, and dollars and their own local currencies as reserves. But eventually, you are going to see a complete monetary renegotiation, and you're going to see very violent currency wars. And then it's, so to me, it's about hedging. It's about building a portfolio that will survive in inflation, will survive in deflation, and will survive in economic decline, and will survive in economic prosperity. And that's really what the arts of: don't put all your money in Bitcoin, don't put all your money in gold, don't put all your money in dollars, don't put all your money in real estate. You've got to prepare for eventualities and the political negotiations that are coming up, because we're at the end of, you talked about Ray Dalio, we're at the end of a 75-year debt cycle. Those renegotiations, you're not quite sure what's going to happen. I've got speculations on what will happen, and I'll put higher probabilities of things happening, but I'm also willing to be wrong. And that's also served me in the Bitcoin and cryptocurrency industry, because many people have these religious ideologies that drive all their money to over speculate on one thing, when sound investment principles need to be applied in order to prepare yourself for the turmoil ahead.
Let me finish this with one quite direct question then, because you're talking about Ray Dalio and his paradigm shifts that he's been talking about a lot. Do you think the dollar could collapse and be redesigned around gold or Bitcoin?
No, I think the dollar can collapse, and it will collapse. It's just a question of when. The pound lasted 350 years. Most currencies only last about 27 years on average. I think we're in 50 years with the dollar. So it certainly can happen. It will happen. But I think what you're going to see next is central bank digital currencies as a mechanism for allowing banks to go bust and consumers not losing their money. I created a whole video on this, so I know it's a pretty deep topic. So on my video, Simon Dixon on YouTube, I covered the real estate market crash and the 10 steps that come next. But I think central bank digital currencies are going to be the next monetary tool to try and protect the dollar. And then I think you're going to see smaller countries using Bitcoin as a tool like they have with gold in the past. And then you could end up in a game theoretical scenario where the losers will be countries that have the last to lose, which is China, Europe, and dollars, because they'll be the last ones to accumulate and use Bitcoin, and the others have more of an incentive to do so.
It's been fascinating to learn all about this from you, and I'm going to have you on again in the future, because I would love to really go deeper into these topics. But for now, Simon, thanks for joining me.
Yeah, thanks for having me.